Welcome to the Economy Magazine. I'm Binyamin, Tjong-Alvares, and as we conclude 2014, we focus on the year's most impactful economic event. We're joined in the studio by Eran Peleg, Chief Investment Officer of investment management firm Clarity Capital, and Eytan Avriel, co-founder and chief editor of Israeli financial newspaper The Marker. Gentlemen, thanks for joining us. Let's first take a look at a report on undeniably one of the most important events of 2014, the drop in the price of crude oil. Benchmark oil prices in New York have dropped more than 20% this year as crude production in the U.S. reached the highest in 40 years. And as the Obama administration allows more of the ultralight shale oil to be sold overseas, the oil glut grows further and crude continues to sink.
One of the biggest economic stories of 2014 has been the dramatic decline in oil prices. From a high of around $115 per barrel in June, crude is trading at about half that now. This has translated into billions of dollars in savings for gas consumers, particularly in the United States.
There are a lot of Americans who are living paycheck to paycheck. So when you live paycheck to paycheck and you get a little bit of pump price relief, that gives you a little more spending power, and you're going to spend it. You're not going to necessarily save it.
It is North American shale and tar sands fuel that are at the center of the oil price decline, and it is industry from farming to mail carrying to airline passengers that are reaping the benefits. The Wall Street Journal reports that according to the trade group Airlines for America, every penny per gallon shift up or down is equal to a shift of $190 million in yearly fuel expenses. On the other hand, oil-producing countries and competing energy industries are beginning to feel the pinch.
Now, clearly the drop in the price of oil is good for certain market players and certainly for consumers, but how long can the global economy continue to support it, Mr. Avriel?
Well, first of all, I've not heard a very convincing explanation of why the price of oil dropped so fast and so far. Obviously, it's very clear what's happening. Those who buy oil have a better time. Those who sell oil have a very difficult time. Take Russia, for example. Probably the reason for the crisis in Russia, other than whatever Mr. Putin is doing in the Ukraine, has to do with the price of oil, because that's a large part of
right.
the Russian economy.
We're actually going to talk about Russia next.
All
but,
right.
I mean, talking about the price of oil, what effect does the drop in the price of oil have for the growing oil substitutes industry, Mr. Peleg?
Well, clearly, I mean, there's a big problem in terms of sustaining any development that's been already in place on the oil substitutes side. When oil is at $100 or $115 a barrel, there's much more of an incentive, obviously, to develop new substitutes. At $50, the incentive just aren't there.
Where do you see the price of oil going in 2015, considering that you just said, Mr. Eytan Avriel, that it's not really clear why it happened? Well, can we predict what's going to be happening in 2015?
No, you can't predict. It's one of those things you really can't say which direction it's going to go and what price you're going to get. What you can say that it will have a lot to do with geopolitics. Any problem, any big story, any small war in the Middle East, a warm winter or a cold winter will make a big difference, as well as the relation between the United States and Russia, and whether actually the American shale producer will begin to slow down their production, or they're just going to go full steam ahead. But it's anybody's guess.
Will we see a drop in the price of flights, of tickets?
There is a chance that we will see some of the benefits passed on to consumers, to travelers.
I mean, airlines are certainly benefiting from the drop in the oil price, right? I mean, wouldn't it be logical to see maybe next year that we see a drop in the price of
it will take time. I think that the airlines need to see that the drop is sustainable, and this is one of the big issues. We don't know exactly, is the oil price going to stay at these levels for how long? The oil price probably at this point in time is in a bit of an overshoot mode, And, fundamental supply and demand models probably would say that it should be a bit higher, maybe $10 higher. And also you have to remember there are a lot of OPEC countries at these levels of oil price are not balancing their budgets. So medium term, there will be further pressure to support the price of oil and perhaps to cut production.
And you see that just about anybody who's involved in energy is having a very difficult time. You see this through the prices of bonds of any energy project. It doesn't matter which project it is. In fact, it becomes more risky once the price of oil goes down so much.
Right. Okay. Well, we're going to stay more or less on the topic, but we're going to move on to Russia, where economic difficulties are directly related to the drop in oil prices. Russia relies on oil and natural gas for 50% of its budget revenue. And while it remains at odds with the West over the conflict in Ukraine, it continues to struggle with sanctions as well.
Russia's economy has been decimated this year, mostly due to oil prices declining and Western sanctions in response to the crisis in Ukraine. Russia, which relies on oil and natural gas for 50% of its budget revenue, found itself in dire straits after a major interest rate hike to 17% earlier this month was put in place to try to stave off the decline of the ruble. But the move didn't help, and the ruble has dropped 70% since the beginning of 2014.
The market has been overcome by fear for a while now. The demand for currency remains high, and nobody thinks there is any sign of reinforcement of the ruble.
The Russian government says that GDP dropped by 0.5% last month, the first such drop in 5 years, and projects GDP decline of 4% next year. At the same time, Russia may help OPEC to prop up global oil prices by slightly cutting exports in favor of domestic refining.
So, despite Russia's economy essentially sinking, Vladimir Putin seems to stay strong in his seat. How long can he hold out, Mr. Avriel?
A lot. Russia is almost a dictatorship with one man at the top who calls every shot. And whatever's going to happen in Russia is whatever's happening in the head of Mr. Putin. And he has shown, and people in Russia think, that he's a man who is willing to go all the way to almost anything, including some armed conflict, including all kind of strange and situations that maybe were not thought of in the West for the 21st century. And it does not seem that he's going to bend over economic pressure or over a financial issue or even sanction. He's very, very determined. Some people say paranoid. But that's the man, and both abroad and in Russia, he has, specifically in Russia, he has a lot of popular power.
Right.
There's no incentive for him right now to change course.
Right. No, your depiction of Mr. Putin, essentially is as a very illogical man, but certainly he would still have an economic interest, realizing the price of oil is dropping as much as it is, or has. He might want to diversify. Will he diversify the economy more?
Well, this is something that they should have done many years ago. Actually, you can say, looking back now, you can say that things have not been managed properly in that respect. Russia was in default in 1998. I remember that very clearly, even today. And back then already, this kind of discussion was out there, and they haven't done anything about it. And they definitely need to do if they want to sustain their economic power and sustain their international standing going forward.
Now, what part do the sanctions play in all of this?
Oh, it's a very significant part. You go on the street of Moscow, you have very little products that are not Russian. Actually, Israeli vegetables are selling very well right now in Moscow because Europeans and other countries are not sending their goods over there. But there's no panic. Prices were very, very high in Russia. You couldn't get a flat, you couldn't get a car, basically, but you had to pay a lot of money. So for the average Russian who gets paid in ruble and buys his goods and products in ruble, it's still not a situation of panic. It's still not a situation that will incentivize him to go to the street and start demanding or pressuring Putin. And Putin seems, again, I said that, he seemed very determined to play it, on the big geopolitical stage, and not be banned by financial pressure.
Well, Mr. Avriel, Mr. Peleg, from what I understand, Mr. Putin is, nationalism is obviously a very, very strong power behind Russia. Where do you see Russia going from here? 2015. What does 2015 have in store for Russia?
I think from an economic perspective, definitely Russia is going to continue to be in a crisis for a long time. I think even Putin said in the recent press conference, expect this to continue for 2 years. A point that's important to make is actually that Russia was already weak. The economy was already weak before the recent drop in the oil price. It's been already close to recession before that. Right. So it's not like things were booming in Russia, and now they need to deal with a completely new situation. Clearly, the drop in the oil, the collapse of the ruble, has put them into a crisis situation. But it's already been there before. 2015, I think Russia is a big wild card for the global economy and from a geopolitical perspective. Right. Will Russia, given what you've just said, will Russia respond maybe aggressively to the pain that's been inflicted on it by the so-called West?
The Russians have had a very hectic history. They are a people who know how to endure hardship, and the government is basically trying and not doing a very bad job at managing this crisis. They are reacting, they're raising interest rate, they're bailing banks. Whatever has been done in the United States in the financial crisis, they're doing now for themselves. When the price of oil recovers from any sort of reason, and it does fluctuate, so you go down, but you also go up at a certain point of time, the Russian economy is also going to rebound at least a little bit. So I don't think we're going to see any crisis or something we have not seen before. Sort of more of the same, could be a little bit worse. There's more channel, will be a little bit better.
Okay, well, we're going to take the discussion a little closer to home, as gas plays a central role in Israel as well, where the antitrust regulator threatened to break an American-Israeli group's hold on the country's gas resources.
Israel has had a challenging year, seeing its rating outlook move from positive to stable last month and bearing witness to the saga of who will control one of the world's biggest offshore gas fields, Leviathan, and its smaller counterpart to the south, Tamar. Now regulators have their sights set on breaking up the monopoly held by Israel's Deco Group and American Noble Energy. Meanwhile, the business sector says 18% sales tax is to blame for the high cost of living, a central issue in the country with 20 to 30% of the population living in poverty. One response was from former Finance Minister Yair Lapid, who put forward a plan earlier this year which faltered for 0% sales tax for some first-time home buyers. Prime Minister Netanyahu tried his own 0% sales tax plan on certain foods. And elections are on their way this spring, which may be cause for economic concern too.
Israel is facing a second round of elections in 2 years. These are bad news for Israel and for its economy. Strong leadership is crucial nowadays. First of all, we must remember that very important reforms will be frozen or cancelled.
With tourism down in this violent year, 33% less hotel stays in October than the year before, and an unstable political reality, Israel has a rocky road ahead.
Mr. Peleg, well, we've seen that the Israeli economy has been slowing down for a while. What exactly is the main event this year that has had the most impact on the Israeli economy?
Well, I don't think it's just one event. I mean, I think the economy has been already slowing for 1 or 2 years. Part of that is kind of part of the global story. Obviously, global growth has not been very strong. But Israel is also amongst those countries, very much the emerging economies that have actually fared well in 2008 and have actually started to raise interest rates afterwards, maybe with a mistaken fear of rising inflation, and have more recently started to slow. These things have now been exacerbated by additional events. I mean, we've had the military conflict with Hamas in Gaza. I don't think that has had a very local impact on the economy, but not a major one. Most of the drivers already been in place for a while.
And in terms of the gas, I mean, where do you see the situation with the gas? Is it right for the antitrust regulator to come in and break up this monopoly, if you want?
Well, absolutely. There's no question, and every expert is saying that the price of gas in the Israeli market, and because of that, the price of electricity and goods in the Israeli market is way too high. The production price in terms of heat of the gas is about $2, and it's sold for about $6. So
Right.
that's a really big difference, and it seems very logical that a price should be reached maybe in the middle of that, say $4
Right.
would sound more, and that will have a lot of effect on everybody's bill. For that, you need one of two things. You need either a competitive market in the gas sector, or you need to have some kind of price control. The system until now was not functioning. That's what the government, the antitrust, has decided to do, and now they're basically asking to think again and place a new plan, which has not been detailed yet, of how maybe this sector can be reorganized in a way that it's either more competitive or it's set by some kind of price control.
Okay, well, since we only have a minute left, where do you see Israel going from here?
Israel has been, in the past, it's been running after the West. It's basically caught up, and now it's sort of stuck with the general growth of the global economy. It can't go much faster without doing some very serious reforms, and over some of these reforms, the government has basically fallen, and unless there's a strong government that implements those reforms, we're going to get the same.
Well, we're going to have to end here. Thank you very much, Mr. Eytan Avriel from The Marker and Eran Peleg from Clarity Capital. Thanks for joining us. I'm Binyamin Tjong-Alvares. Thanks for watching the end of your special of the Economy Magazine, and join us again next year. Thank you.